and John Grace, founder, president, Investors Advantage Corp. John, thanks for joining us this afternoon. Amazing. We had a great week, best week since early June. Even what I thought was very interesting is folks stepped in at the end of the day on a Friday into the S&P 500 and the Dow. Of course, the NASDAQ hit the record yesterday. So I wanted to get your outlook because people want to make some decisions, but they have some FOMO. Some are in cash, some are they don't know how to navigate, right? And it's a tough one, isn't it?
Well, it's always a tough one. But if you like a line, let's not forget stocks love to take the stairs up that wall of worry and the elevator down. So decide that you have to play the game and you have to be agile to play this game. And sometimes we see the pattern, particularly as you pointed out over the last 10 years, where there was a great amount of certainty. There was a great amount of optimism. And part of that's what's been driving this market. But, savvy investors hate losses more than they love gains. And let's just recognize, while it might have been a good day some places, year to date, what do we have? The Dow, I think, is up about over 3%. I think only the S&P is up about not quite 4% from January 1 through today. It's the NASDAQ that's hitting the ball out of the park so far at over 22% gain from, again, January 1 through today. But, there are peaks in here. I thought we would see 4,200 to 4,500 on the S&P. Perhaps we will. But at some point, there is a ceiling. And what I'm saying to folks is now is the time to be prepared for great losses. We might test the losses, that 35% when we saw from February 19th through, I believe, March 23rd. I bet we retest that and we might go lower from here.
Tell me about the active versus the passive management. You are a fan of active management. You talked about the sell-off and how much better active management did. The one thing I will say about passive is if you just sort of sat there and didn't do anything, in many cases, you might be at or near where you started. If you went away to the nowhere land and came back, you might be close to where you were. But tell me a little bit about what you're proposing at this time to your clients.
Yes, as I say, for those who are worried about the losses more than the gains, they want to stay in the game, right? They do not want to have a Hail Mary pass to get back in the game. So if the market was off, as many stock investors were from 219 through 320, 320, about 30, 35%, passive investors were off in some cases 7 or 6% during that same time. And just to make it really simple, think of it like this. Let's go back to 2008 and let's go back to the movies that we all loved, the Karate Kid. Wax on, wax off. So in 2008, as we saw the market kind of going down like the Titanic, passive investing means we kept the same ratio of cash in the account. Active means that we increased that cash. We sold those shares where the prices were declining, okay? And they may never come back. But we didn't ride that railroad train down to the bottom. We moved money out of stocks or bonds into cash, where the balances may have started 5% in January, but got to 60% or 100% by 12/31/2008. And so that would have kept or did keep many investors' losses limited to 20% or less. Now, that's wax off. In 2009, starting March 9th, of course, we want to wax on. That's upward volatility. So now we want to double down, put the pedal to the metal, go to 100% stocks, 100% bonds. Didn't matter where you went. But here's the math. If we kept your losses limited in 08 to 20% or less, the math is very simple. We only need a gain of 25% or more in 2009. And if we did that or better, what we see is that those folks who enjoyed that kind of movement on their behalf without their having to do a thing, the systems did it for them, then they saw that they were back to even in a year or two when we were in the passive investments. And that was, of course, a great run from 2009 up to 2019. It took those accounts oftentimes 4 to 5 years to get back to even.
I see. All right. Good to know. Great analogy there. Great explanation. My favorite line from that movie, Karate Kid, was "Your focus needs more focus." I thought that was a great movie. I enjoyed it very much. Thank you, John Grace. Nice to see you. Founder, President, Investors Advantage Corp.